You know, the two-year mind melds most closely with Federal Reserve policy. It spiked. Previous close was 4.22%. Right now, we're at 4.36%. So you're looking at a 14 basis point spike here. Suddenly, what was a slam dunk bet that the Fed will cut rates at its March meeting has turned into a jump ball. Let's break the news right here. Friday, March Fed funds futures showed the odds of the central bank would slice rates from their current 5.25% to 5.5%. Those odds were at 80%. Right now, they have dropped to 55%. So here's the question for those of you with a stock portfolio. Can the stock market continue to gain if there is no rate cut in March? Let's bring in a billionaire investor who's had an incredibly successful investment record through many a Fed rate hike and cut, Leon Cooperman of Omega Family Office. Leon, we can see that the bond market thinks there will not be a rate cut in March, but where do you stand on whether the market's bets are too aggressive in betting on 6 rate cuts this year?
I think those who are looking for 6 rate cuts are smoking some substance. I think if you got 3, you would be lucky. And I am of the view that interest rates in the 10-year sector are not high enough. And everything I look at, whether it's the speculative nature of the stock market, the level of the market itself, and the real return, it would suggest to me that rates aren't really that high.
Yep.
And it's a real conundrum for the market.
Well, a conundrum, but people sit there and they're in fantasy land thinking that there are going to be 6 rate cuts when we have very strong retail sales numbers. Sure, some of the softer economic data like consumer sentiment might be a little wiggly. The Empire State Regional New York Index wasn't so strong, but some of this is looking very healthy. I mean, you're supposed to cut rates when the economy needs stimulating.
Well, we have to look at the long rate and the short rate. So I think the Fed funds rate will come down, but I think the yield curve will go positively sloped as the long end of the curve will either stay flat or go up. Prior to the great financial crisis of 2008, the 10-year bond yielded in line with nominal GDP. If you said inflation was 2 to 3% and real growth was a couple percent, the 10-year wouldn't be undervalued at a 5% yield.
What's a guy like you?
I think the 10 years.
Sorry, go ahead.
Okay. I think that the 10-year is going up in yield. And the problem for the market is the stock market at 20 times earnings is already expensive relative to interest rates. If you have interest rates in the 10-year sector going up, that's really a headwind for the market.
Okay. What does this mean?
What is a guy like me doing?
Yeah. What does it mean for the equities markets overall? And what is a guy like you thinking about purchasing or staying away from?
Well, I would say that my own view is we're heading towards a financial crisis, but nobody knows when it's going to hit. And the reason I say we're heading towards a financial crisis, the amount of debt being created in the system is out of control, both Democrats and Republicans. But you don't know when the problem is going to hit. I remember being a partner at Goldman Sachs in 1972 when Henry Fowler, we called him Joe, was big buddies with Pete Peterson, and they were very civic-minded citizens. They took money out of their own pocket and ran full-page ads in the Wall Street Journal and the New York Times alerting the public to the evils of the budget deficit. Well, the numbers are materially worse than anything they ever imagined. And what is the consequence? The lowest interest rates in our lifetime. Okay, and then we had Simpson Bowles, nothing happened. And now we have Manchin and Romney speaking out of controlling debt creation in the system, and nothing happens. So I think that we're heading towards we have a government system of leadership at a crisis. We're living too comfortably with our policies now. When we get into a crisis environment, we'll get cooperation, but the market is not discounting a crisis. But the truth is, I have no idea when it's going to hit. So it influences my thinking. I'm staying away from U.S. government bonds. I think they're overvalued, and I think the stock market has been extraordinarily bifurcated. And what I mean by that is, 7% of the market is the Magnificent Seven. We know they're very richly appraised. They're not overvalued given their growth rates, but I don't traffic in that market, though I do own Google, I do own Microsoft, but I don't own the other ones. I have a conservative view, and I say to myself, what's a bear market? A bear market is a period of time when more stocks are declining than rising. The decline average is about 25% and lasts about a year. By that definition, the vast bulk of the market has experienced a bear market. So I'm looking for things that are down a lot where we have cheap stocks, where we have corporate repurchase programs to back up the cheapness of the stock, and where they're paying me to wait. I think the stock market is going nowhere from this level for a long time.
Okay. When you talk about what you do look for, where there are stock repurchases and the stocks are at least at a less expensive price, they've finally been discounted. You're looking to our neighbors in the north. You've got 2 Canadian stocks that you want to talk about, but also a couple of U.S. stocks.
I have more than a couple. Most of my portfolio is U.S. based.
Okay.
That's where my strength is. The oil stocks you mentioned in Canada are Tourmaline and Paramount Resources. Paramount Resources, for example, the stock yields between 5 and 6%. They have no debt. They produce oil at $31 a barrel. They're projecting about 105,000 barrels of production this year. And in 3 years, they can get to 150,000 on the infrastructure they have in place. They're generating material free cash flow, and they have no debt. And it sells around 3 or 4 times cash earnings. I find when I buy something at 3 or 4 times cash earnings, I get lucky. Now, the guy that runs Tourmaline, the guy that runs Paramount, his sister's married to the head of Tourmaline. And Michael Rose, arguably, is one of the smartest guys in the energy business in Canada. And he has a little bit of debt, but a stock yielding about 11%. And they have big natural gas exposure, and we're very positive on natural gas looking at a couple of years. So those are 2 that we like. We like Cigna with a big repurchase program, Elevance and Healthcare also with a big repurchase program. We're big on getting paid while we wait, and if my analysts tell me something is cheap, I want to make sure the company has the financial ability to capitalize on cheapness and buy back cheap stock. And that's been our touchstones. Pay me to wait and buy back cheap stock. If you can't do a buyback, your stock is cheap, I'm very suspect.
Don't you think that buybacks sometimes, though, Leon, are a little bit of financial engineering?
Yeah, in some cases they are. In 2007, I gave a speech at the Value Investing Conference on 2 subjects. Dr. Henry Singleton, who is brilliant, and stock repurchase. And Warren Buffett sent me a letter right after seeing those speeches. He said, you couldn't have picked 2 better topics. Henry Singleton is a CEO that all MBA students, all CEOs and would-be CEOs should study. I say that because he's 100% rational. And he was the smartest guy I ever dealt with, Dr. Singleton. Unfortunately, he's deceased. In the stock repurchase situation, Warren's words were, the stock repurchase situation is fascinating because when it was being done 30 years ago, it was being done for the right reasons. More recently, it's being done by companies looking to support their stock or manipulate Wall Street expectations. So I think what you're saying is right, and this is where the analyst comes in. You got to look at each repurchase program on its own merits. Are they right? Are they wrong?
Right.
Are they buying back expensive stock or cheap stock?
Well, again, you look for the discounted names that have a really good balance sheet. Leon, we got some news headlines swirling on a couple of topics, one of which we had talked to you about back on October 25th, shortly after the October 7th attack by Hamas on Israel. A lot of universities in the United States, including your alma mater, Colombia, had sat silent while there were unbelievable cases of anti-Semitism on them. Back then, you told us you were going to hold off on any future donations. You had already given about $50 million. How do you feel about Colombia now?
Right.
The head of Colombia has not changed a thing, really. Manouche Shafik she released a statement that was sort of on one of these both-side-isms.
Well,
she's still there.
You created a lot of visibility for me. You created a lot of visibility. I think on the program I said that the college kids today had brains. And let me elaborate on why I said that. Number one, I hear that some of these kids think that we're talking about the Hudson River or the Nile River. They don't understand it's the Jordan River, number one. Number two, more importantly, the only reliable ally in the Middle East that we have is Israel. The only democracy in the Middle East is Israel.
Exactly.
I can't believe it. I see gays for Palestine. And Israel is the only country in the Middle East that allows gays and lesbians to practice what they want to practice. The other countries frown on that. Israel accepts them. And if you're living in Israel and you're a Palestinian Arab living in Israel, you could vote. So, Israel took the money they got from the West. They did constructive things with it. The Palestinians allow Hamas to get a hold of the money. And what did they do with the money? They built tunnels. And so I told the Colombia president called me. I'm a small guy, $50 million. I'm not a big guy. I think Mark Rowan has done an excellent job at UAP.
Well, that president was fired, as was Harvard's president. Colombia's president should remain, even as she has failed to speak out against a professor who called the October 7th attacks by Hamas, interesting and creative?
Yeah, well, when I said, she called me to chat, and when I said to her, if you think Israel, you have a PR problem, think about Israel. 1,400 of their citizens were slaughtered, basically, and they're trying to they're being challenged for their actions. What you should have done is come out and say, the professor who praised Hamas does not speak for the university. Basically, we'd fire him if we could, but we can't because he has tenure. Basically, there's no room on the campus for hate of any kind, for any religion. And anybody who practices hate will be expelled from the school. I said to her, that's what you got to say.
And
stop pussyfooting around. And she appreciated what I had to say, and she take it under advisement. I'm an activist. I'm going to speak with my money, but I'm not going to tell them how to run the show. It seems to me that it's very clear what's got to be done. Anti-Semitism, there's no room for anti-Semitism in the world. And I believe if you're an anti-Semite, you're ignorant. And I say that with objectivity. Why are you ignorant? Because number one, the Jewish population worldwide is about 15 million people, half of which live in Israel, and the other half lives either in New York or the rest of the world.
Gotcha.
New York is a big center.
Yeah.
Okay, there are 0.2% of the global population, and 20% of the Nobel Prize winners are Jewish people. We've done a lot for the world in terms of our invention and things we've done.
Well,
there's no basis for anti-Semitism.
Couldn't agree more. And we'll continue to watch what happens at Colombia. Leon, thank you for your investment opinions and advice and perspective, as well as your other comments. Leon Cooperman, we are coming right back